You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is time for TWIFO, This Week in Futures Options, the program where the name pretty much says it all. We break down the week that was and indeed still is on the futures options side of the fence. I want to thank all of you out there who continue to rate and review the show out there on your platform of choice. Helps new people discover the show all the time. And of course, if you want to go above and beyond, you want to do more options living in your life, not just limited to the full offering on the network. You want to go above and beyond. Great pro Q&A sessions. Of course, options oddities at the end of the week. Live access to everything we do throughout the week. Of course, access to our exclusive pro podcast feed, which will give you 200 or close to it additional exclusive episodes you can sink your teeth into so you can mainline for over a week straight easily. Nonstop. No bathroom breaks. No sleeping, no stopping to eat, just nonstop listening. So a lot of content waiting for you, as well as pro trading crate giveaways. You get your name automatically entered into the hat. You can win, just like Stegosaurus did this week. Congratulations to you and all the rest of our winners out there. All sorts of fun to be had. TheOptionsInsider.com/pro is the place to go as we go right on into the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers report, the portion of the show where we break down everything lighting it up to the light side and to the dark side over there at CME this week. And I'm looking at the chart right now, listeners. You guys can see it for yourselves if you follow CME on Twitter, or if you follow us at Options on Twitter, you'll see this report. We tweeted out right before showtime. And it is, I'd say, roughly 2/3 red and about 1/3 green there. So biased to the dark side, but not quite as crazy as we've seen in recent weeks. We can easily make a top 5, even a top 10 in both directions. So no problems there. So because it's just me in the old hot seat today, I get to choose, which is always fun. So I'll mix it up. I'll go dark side because why not, listeners? Number 5, to the dark side, we're off to the Ags. It is oats, off 2.9%. We love oats. Oats light up our movers and shakers all the time. Unfortunately, they don't light up the options tape too often, so kind of hard to squeeze them onto the show, but we'll see sometime in the future. Maybe we can make that happen. Number 4, we're going off to the crypto, and Bitcoin in particular off about 3% this week. Number 3, back to Ags. It's corn, off 3.3% this week. Number 2, staying in Ags with KC wheat, off 3.76%. And the number 1 dark side mover, so it's pretty much all Ags with the exception of Bitcoin. All dark side with the Ags this week. Number 1 to the dark side this week, listeners. Good old Chicago wheat, a.k.a. SRW wheat, off indeed 4.4%. To the light side now we go, listeners. And we start off in energy to the light side. WTI up 3.77%. It was number 4 in the other direction last week, off 4.7%. So almost getting back what it gave up last week. A little bit more to go there. Number 4 still hanging out in the energy with RBOB up 4.46%. Number 3, by the way, where are our frequent offenders hanging out? We got Bitcoin already on the list. We're looking for nat gas and we're looking for lumber, our other 2 of our 3 frequent offenders, listeners. And we got number 2 here coming in at number 3 to the light side. It's lumber up 5.63%. A 5+% move, kind of a quiet week for lumber. Dead trees, extremely volatile. But this week, only number 3 up 5.63%. Number 2, back to the energy. It is heating oil up 7.82%. It was number 3 in the other direction last week, off 4.85%. And the number 1 light side mover, the third of our 3 frequent offenders, nat gas up 13.67% this week. It was number 2 in the other direction last week, also off about 4.85%. There we go. I think we have had all 3 of our frequent offenders and our movers and shakers pretty much every show this year so far. That might be a record. I'll have to go and check. Maybe there was one day where we only had 2, but just about every show this year so far, we've had nat gas, we've had lumber, and we've had Bitcoin in there in some capacity. So, wow, the trifecta continues. And given the fact that our number 1 light side mover and our biggest mover on the list this week is nat gas, well, then off to energy we go.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, to the wonderful world of energy we go. Listeners, you know where to go. CMeGroup.com/TWIFO is the place for you to follow along with these reports. Once you're in there, go into that drop down and then go down 3 slots or 2 slots from the top to energy. And then we're going to go down 3 more to natural gas in the product family. And you'll see once you do that, listeners, quite a banger week for nat gas on a volume, on a underlying movement perspective. You've been listening to the show for a while. You heard myself and Dan Gramza recently and other guests kind of wringing our hands saying, wow, this is a surprising drubbing that nat gas has taken, especially given how far it's fallen from the immediate post-invasion highs there. And then also on the show, it was surprising how much paper was still lining up for more moves to the dark side. 2 puts, 1 3/4 puts, even 1.5 puts trading for size out there when we were trading much lower than we are right now. Where is nat gas right now, listeners? Trading a little bit north of 275, about 277. So up about 23 cents or about almost 9% on the week. So quite a pop for nat gas. Of course, if you go back to the end of our show last week, it's up nearly 14%, 13.67%. So a banger week for nat gas, however you want to cut it. Also a banger from a volume perspective. Usually we expect to see 400, maybe a good week, 440, 450 in terms of paper. This week, 648,000 contracts on the tape. So nat gas is delivering on all fronts out here, listeners. Just an extremely active week. And last week we had a very near-dated contract, a contract that was expiring pretty much close to the date of our show. So it was like we effectively had a weekly or even a daily to trade in nat gas. This week, not the case. The nearest dated contract we have out there in nat gas right now is the April contract. So no more weeklies out there. And we have about 26 days to go with that contract. But nonetheless, that is still the most active contract with a little over 40% of that 648,000 contracts going up in the April contract there. What is the vol out there? You might be wondering. It's a 75 right now, off 11, almost 12 points. So coming in quite a bit. In terms of skew, last week, the bid was to the puts, 5.6% premium. The discount was to the calls, 2.5% discount. So very much an equity skew, very much reinforcing what we were just talking about. The fact that the options were seemingly all lining up for another leg down. And yet, that's not what we saw this week. This week, the puts are even more bid, 8.3% bid, and the calls are even more offered, 5.9% cheap. That's not entirely surprising. When you move up the skew like that, you expect to see the calls come in, the puts get a little bit bid, and that's pretty much what we see out here this week. In terms of action, listeners, what was leading the dance? I said we're at a 277 right now in that front future. It's the the April 3 calls, listeners, that were just blowing the doors off. I said we had 648,000 contracts, 81,597 coming in these April 3s, including just an explosion of them on Monday, 62,500 going up on Monday, pretty much all opening. Man, that's a lot of paper on the April 3s. The next day, Tuesday, 9,500, Wednesday, 4,300, today, 5,200. Total of nearly 82,000 going up on the week, but just a tsunami of paper on these April 3s on Monday. My goodness, what a day. That's more than some complexes do just in these April 3s here in NatGas, listeners. So, wow, going to be hard pressed to find anything even close to that. I think the closest we come, again, going back to my point I was making earlier about interesting paper to the downside, it's the two puts. The two puts actually not in April, but in May. The two puts in May did 48,000 contracts this week, 48,152 to be precise. And then unlike the three calls in April, it wasn't one day that was a big explosion. They were active all week. The busiest day was Monday, 13,000 almost exactly, followed by Wednesday, almost 13,000, 12,800, 11,700 on Tuesday, 10,500 today. Seems like opening throughout the week. So opening on the two puts and then an explosion, a tsunami of opening on the three calls in April out there as well. So intriguing stuff. A big prints abounding here. Not to be outdone, listeners, also moving out to May. The May 1/2 puts coming in at number 3 this week with nearly 40,000 as well, 39,300. Paper doesn't quite line up for verticals, and also they were trading actively throughout the week. So unless someone was actively trading verticals or rolling every day this week, it just seems like it was just a lot of nearby paper going up on the 1/2 puts in May this week as well. The busiest day was actually Tuesday, almost 13,000 on Tuesday, followed by 11,400 today, 9,500 on Wednesday, and only 5,500 on Monday. Actually slightly closing on Monday. So there's a potential maybe there was a little bit of a roll up there on Monday. Intriguing stuff, but a ton of paper on the two puts and the 1/2 puts there in May as well. Then let's go back to April, because then we have the two puts in April, also pretty active, 25,000 of those this week going up. The big day today, nearly 12,000, 7,000 on Monday, 5,000 on Tuesday, only about 2,000 on Wednesday. Opening most of the week, closing on Wednesday. Then we have 24,000 of the 2/4 puts also going up this week. The big day for those also today. So maybe some vertical action today. Very similar size paper, about 11,500 going up today. 3,200 on Monday, 6,000 on Tuesday, 3,600 on Wednesday. So opening throughout the week on the 2/4 puts as well. So maybe some folks are taking the opportunity to take their positioning on strikes talked about last week, 1/2, 1 3/4, and maybe roll them up a little bit to some more relevant strikes now that we're hanging out close to 2 3/4 out there in NatGas. What have you guys been up to in NatGas? I know it's been a fascinating one for a lot of you. I know a lot of you play it in a lot of different ways. Some of you go straight to the futures options. Others of you like some ETFs, which have their own issues. Others like, let's say, NatGas names, like Tellurian or other ones like that. I'm curious if you folks have been active in NatGas. Hit us up. Let us know what you've been up to out there. And since we also had a number 5, our old friend WTI on the movers and shakers this week, we're going to head out there next. Keeping the game here in energy this week, listeners. It does seem like we're pretty dominated by energy and ags this week with a smattering of crypto. But WTI also a pretty active week, 78.17 as we're kicking off the show, up about 185 or about 2.5%. Since the start of the week, you go back to the end of our show last week, it's up nearly 4%, about 3 3/4%. So a good week for WTI. Paper-wise, decently active, not blowing the doors off like nat gas. 357,000 contracts on the tape right now. The busiest month looks like it is the April expiration with about 35, almost 36% of the paper. That has 14 days to go, so you do still have your weekly action in WTI where you don't have that in nat gas. Gives you a few more options, pun intended, than nat gas where you're pretty much just stuck with the monthlies. Let's see. What is the vol in WTI right now? It's about a 34, off about 3.25 points. So still decently frothy, more volatile than your traditional equity, but nowhere near as volatile as nat gas, as we just saw, listeners. In terms of skew, last week the puts were 4.7% rich. This week, 6.5% rich. And the calls last week, 2.2% cheap. This week, calls coming in 6.8% cheap. And in terms of the action, it was the 70 puts in April that were leading the dance this week, listeners. Doing 18,000 contracts. The big day was Wednesday, 6,100, 4,800 on Tuesday, 4,600 today, and about 2,700 on Monday. Back and forth opening to closing all week long, so a lot of mixed action on these April 70 puts. And then behind that, we have the April 80 calls doing 11,000 contracts, almost exactly. The big day for these was Wednesday, about 3,500 on Wednesday. Tuesday, 2,400. Actually, no, take it back today. Today's 3,000, and then Tuesday, 2,400, and then Monday, 2,000. Looks like opening throughout the week on these 80s. So we are flirting with the 80 strike. Not surprising to see people starting to flock in there. A lot of paper spread out here, as you would expect, but maybe not all the strikes you would expect. What if I told you the third most active contract in WTI this week, listeners, was the DTE 2023 30 put? Yes, the 30 put, 3-0, 10,142 going up on Tuesday, a couple hundred on Wednesday as well, but Tuesday was the big day. Almost all of that opening. Wow, that's an intriguing print there. The 30 put, listeners, in DTE of 2023, so DTE of this year. If I had to ask you right now, buy it or sell it, which would you rather do? That might be a fun little flash poll we could do out there. These 30 puts. What would you rather do with them? Buy them or sell them? Maybe producers take note of that. Maybe we need to do a flash poll on that a little bit later today. I know which way I would like to go, but I'm curious for you folks what you'd be up to out there. I did not expect the DTE 30 puts to be coming into our top 5 here in WTI this week. I'm scanning really quickly. I don't see those nonsense verticals, listeners, which is a relief because it was A, kind of gumming up the works, and B, really a bunch of nonsense paper for the most part. The 90s are trading out here in May about 6,000 times. The big day today, 3,400, 1,500 on Wednesday. The rest scattered throughout the week. So May 90s getting some action out there. Also seeing some action in the June pars. June pars doing 5,600 contracts. The big day for those was Monday, 3,200 going up on Monday, 1,700 today. The rest, such as it is, scattered throughout the week. Back and forth, opening to closing. So some folks opening, some folks closing here on the par calls in June as well. So the paper kind of all over the place. We got 70 puts, we got 80 calls, we got par calls, we got 30 puts. Man, quite the smorgasbord of activity. I guess pick your poison, pick what you're up to, pick what interests you, and chances are there's something to garner your attention here in WTI this week. But now it's time for us to keep on moving, listeners. As I mentioned, it's mostly energy and ags this week, so let's get out to the ags next.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, welcome to the wonderful world of ags. Go into that drop down, pop out of energy, and you're going to go all the way up to the top of the list. It is an alpha order list after all. And we're going to go to ags, and we're going to go into product family, grains and oilseeds. And because it is our number 3 dark side mover, and because it is the big dog in the world of ags, and because we never really get a chance to talk about it because it doesn't really make our movers and shakers too often, let's sink our teeth into corn first, listeners. Where is corn right now? You might be wondering. It's 633.5, off about 15 3/4 handles, or nearly 2.5%. just since Monday's session. Obviously, you extend that to the end of our show last week. It's off about 3.3%. How much paper going up in corn? About 454,000 contracts. So that looks like nat gas on a normal to decently active week. Obviously not this week, nat gas blowing the doors off that this week. But that also looks like decent numbers for WTI out here. So corn doing 454,000 contracts this week. Of that, 36% coming in the May expiration cycle. So we're hanging our hat out there. Where is the vol? You might be wondering. In May corn, it's at about a 20 even. So very, very similar to what we're seeing in the equities right now. Kind of interesting. Off about half a point on the week. In terms of skew, the puts last week pretty much flat. No real discount or premium to them at all. This week, they've gotten a little cheaper, about 3.1% cheap. The calls last week, 3.1% rich. This week, 2.7% rich. So the calls coming in a little bit, but not a heck of a lot of evolution there. In terms of action, what was the most active contract here in the big dog for the ags? It was the 650 calls in May, doing 11,100 contracts this week. The big day was Monday, 4,800 on Monday, 2,600 on Wednesday, 2,300 on Tuesday, 1,200 today. Looks like opening throughout the week. So as we're flirting with it, we're at that 633 level right now, 650, not that far away. Starting to see a bunch of opening paper on those 6.5 calls. Not to be outdone, right behind it, we have the 620 puts doing 10,400 contracts this week. The big day for those, though, not Monday, but actually Wednesday. 6,300 going up on Wednesday. It's like most of that closing, actually. Then about 2,000 on Tuesday, 1,700 today, and a couple of hundred on Monday. So it looks like mostly closing on these 620 puts. Makes some sense. Maybe we're blowing past that strike now, folks thinking, okay, maybe that one's a bit in the rearview mirror. Taking those 620 puts off, living to fight another day out there. And we also, actually, I take it back. Doing a little bit more paper than the 620 puts are the 700 calls, doing about 11,000 contracts here. These obviously also in May. May is where the action was in corn this week. The big day for those was Tuesday. So kind of all over the place. Monday for the 6.5 calls, Tuesday for the 700 calls, and then Wednesday for the 620 puts. Kind of all over the place for corn this week. The 700 calls on Tuesday doing 4,200 contracts, 3,700 on Wednesday, about 2,000 on Monday, and about 1,000 today. It's like back and forth opening to closing throughout the week as well, including the big days, Tuesday and Wednesday, mostly closing. So interesting paper here in corn. Kind of, like I said earlier, a little bit all over the place. Let's scroll a little bit farther, see if anything else is catching our eye. You know what, listeners? There is one more that we did miss. Outside of the big May expiration cycle that has most of the paper, we also saw some paper going up in April as well. In particular, was the 650s in April, doing nearly 17,000 contracts. So these are actually the big dog here this week. And the big day for those actually today, about 5,400 going up today, 4,700 on Tuesday, 4,000 on Wednesday, and about 2,500 on Monday. And actually, looks like they were opening every day this week. So people piling in to the April 6.5s. Again, a strike that makes some sense here. You know, we saw the 6.5s going up in May. Why not the Aprils as well? And even more going up in April. So intriguing stuff. They kind of were hidden there, but interesting to see that 6.5 strike kind of dominating the list here in corn. Let's go around a little bit, see if we see any other interesting and or aberrant paper. How about the July pars, the July 700s going up 7,200 times this week. The big day for those Wednesday, 3,400. Most of that closing, and the rest kind of scattered throughout the week, opening to closing. So 700s, maybe some folks bailing on those in July. That's kind of interesting because they have time for those to run. Maybe deciding 700, a bit of a bridge too far by July expiration. 800s also trading in September. Not a ton, though, about 2,000. Looks like most of that was on Tuesday, about 1,400 on Tuesday and 400 on Monday. Looks like people were bailing on them both days. So someone getting the heck out of Dodge on the September 800s, saying that definitely, at least for them, a bit of a bridge too far. Not all calls, though. We got the 500 puts in December also trading it up this week to the tune of about nearly 6,000. Kind of equal distant paper on Tuesday and Wednesday, 2,300 both days. Looks like opening on both days as well. 800 on Monday, slightly opening there. Only a couple of hundred today. So some folks playing in the 500 puts in December in the middle of the week on Tuesday and Wednesday. Let's go see. Where is that future? That future's trading at 570. So the 500 puts, not quite as out of the money as we're talking about here with the future. The nearer dated futures trading around 633. Seems like that's the brunt of the business here, listeners, in corn this week. Since it is number 5, we always joke about the fact that it does no paper, but let's make it demonstrable on the show here. Let's pull up oats, our old friend oats, to see how much paper is going up in oats. We were just talking about 440,000 contracts in corn. And in the same week that oats is number 5 on our movers and shakers list, corn has done a whopping 9 contracts so far, including 6 of the 345 calls when the corn future is at 332. Those are the April 345. So there you go, listeners. There's your breakdown. I could do the whole thing in about 2 minutes. All right, to the land of wheat we go now. A KC wheat and SRW wheat both making the list this week. Not surprising. SRW wheat, the bigger mover of the two. It's also the most volume of the two. SRW wheat doing about 110,000 contracts right now versus our friend KC wheat, only about 10,000 contracts. So a substantial difference between KC wheat and SRW wheat, which is why we tend to hang in the Chicago wheat. We're not just biased because it's Chicago. We would do KC wheat if it did more paper. It just doesn't. Where is Chicago wheat right now? 712 3/4 in that front future. That's off exactly 9 handles or 1.25%, which is kind of interesting. Obviously, you fast forward to the end of our show last week, it's off about 4.4%. So bit of a dark side week here for all the ags, really, including Chicago wheat. And of that, let's see, how much paper is it? About 110,000 contracts. Nearly half, about 42% of that, going up in the April contract that has about 22 days left to go. So guess where we're hanging out, listeners. We're going to April as well. What is the volume? You might be wondering in April wheat. It's nearly a 30, about a 29. It's up about 2 3/4 points this week. So looking fairly frothy. It's obviously higher than equities, a little bit lower than what we were talking about in WTI, obviously much lower than what we're talking about in nat gas. It looks like a little bit less than I think we were talking about, a low 30s in corn as well. So intriguing stuff out here for good old SRW wheat. Let's get into the skew. The puts last week, 4% cheap. This week, nearly 10% cheap. So the puts getting a lot cheaper. The calls last week, 6.6% bid. That's where the action was. This week, even more action, 11.6. So the calls gaining 5 points and the puts losing almost 6. So got an inverse equity skew here, listeners. Intriguing stuff here. In terms of the action, let's see if we can find some paper that explains that skew. We got the 800 calls. So out of the money calls leading the dance to the tune of 7,200 contracts. Almost all of that, 5,100 going up on Monday. Most of that closing, 1,000 on Tuesday, and the rest about 400 each scattered today and Wednesday. So folks are bailing on the 800s in April. Interesting. Maybe they had overwritten them, decided to come in here and buy them back, hence that skew getting bid up a little bit. Either way, we are seeing a big skew move to the calls here. Behind that, we have to go out now to the May contract, the May 800. So 800 is clearly where the action is this week, listeners. The May 800 is doing 5,600 contracts. The big day today, nearly 3,000, 2,900 going up today, 1,100 on Monday, 800 on Tuesday, 600 on Wednesday. Opening throughout the week on the 800s here. So interesting. Maybe you have a little bit of a roll action. Maybe they're closing in April and rolling out to May on the 800. That would probably make some sense, given we're seeing out here maybe buying themselves a little bit more time. It's not like the April is going out tomorrow, but suppose they want to get while the getting is good. So it looks like the 800 roll is kind of dominating the tape. out here this week. Let's see if we find any other interesting and or aberrant paper out here. In Chicago wheat, the 760s doing about 4,000 contracts. Almost all of that on Monday as well. Monday, the big day, obviously, for Chicago wheat. Mostly opening 3,000 on Monday, mostly opening, and the rest kind of scattered throughout the week. The other about 1,000 coming in piecemeal throughout the week. So maybe a bit of a roll down on Monday, too. But the numbers don't entirely line up, though. You're talking 5,200 of the 800 versus 3,000 of the 760s. Granted, we have seen crazier things. If you listen to some of our other shows, listeners, you know about house money rolls. You do more the second leg. It usually means you're making money. If you do less with the second leg, that probably means you got burnt a little bit. So that could be some of that at play here as well. Look really quickly here. Also, the 710 puts. These are also in April doing about 2,300 contracts. Again, Monday, the big day. 1,000 of them on Monday, 900 on Tuesday. The rest, such as it was, scattered throughout the week. Mostly closing there as well. So interesting pockets of paper. Looks like most of it going up on Monday. A lot of it focused on the 800 calls, and then some on the 760s, and a little bit on the 710 puts when wheat is hanging out at 712 and 3/4. All right, listeners, we've done ags. Obviously, we can't do lumber. If you want to do a quick check-in on lumber as well, because it is in the ags technically, got to scroll down to the softs to find it, listeners. It's the only thing in there. And in spite of the efforts to add narrow-dated and minis and other contracts out here, we are seeing a whopping zero, a whopping goose egg going up out here in lumber for this week. It's disappointing. I know it moves. We've discussed it on the show. We've asked a lot of people here. Wow, yeah, not for lack of movement, not for lack of volatility that lumber does nothing, listeners. It's just for whatever reason, not drawing out all of the options traders out there. But we did see Bitcoin on our dark side movers there. The only other thing outside of ags and energy this week. So I suppose off to crypto we go.
It's time to explore the volatile world of Bitcoin, Ether, and more. It's time to talk about crypto.
All right, everybody, welcome to the crypto segment here on TWIFO. Let me just throw a little plug in here at the top. If you're intrigued by all things crypto, then I heartily recommend you check out our crypto rundown program, in particular, the episode we just did this week with the folks over there at Amber Data. You know, good data in the world of crypto, very hard to find. And they really crunched all the numbers in the world of Bitcoin options to try to find out what's going on out there, what's going on with the futures, the options, the term structure, the vol, the skew. What are some of the strategies that actually seem to work out there? What are some that don't? You know, fascinating granular bits of data. How long in hours do the futures typically remain backward when they get backward? Spoiler alert, the mean is 85 hours. I've never seen it measured to that degree of specificity before, 85 hours. But that is the case. So if you're looking to profit off of the crash from backwardation back into contango, that's how long you have to expect to wait. Little nuggets like that. It was very fascinating stuff. So if you're not normally listening to the crypto rundown, first off, you're listening to this show, you should be subscribed to the full network. It's right there for you, all for free. And then B, that's the only other show on the network where we really go into crypto in any great capacity, and that the whole show is about it. So if you're not satiated with this little taste of crypto that you get here on TWIFO, listeners, then by all means, check out the crypto rundown. And again, in particular, this episode this week, a lot of hard data that you folks can utilize. What are some strategies that work well? What about risk reversals, straddles? We got into all of that on the show. Certainly a fascinating episode, if I do say so myself, listeners. All right, off to the world of Bitcoin we go. As we're kicking off this segment, 23,610 in those big Bitcoin futures, up 265 handles or a little over one, about 1.1%. Obviously, if you go back to our show last week, it's off about 3%. And it looks like some actual paper hitting the tape this week, which is good to see. Again, these are the big contracts, so 5X, and Bitcoin a little bit more expensive than it was a few weeks ago. So that contract getting more expensive by the day, it seems like. 1,258 contracts going up this week. So that's nothing to sneeze at. Again, that's not E-mini. It's not Eurodollars or the artist formerly known as Eurodollars, now known as SOFR. Certainly more than lumber or oats. So it's somewhere in the middle there. 1,200 contracts. The big dog, such as it was The 24,000 puts going up 254 times this week. Those were in March, followed by the 28,000 calls, in April going up 100 times, and the 20,000 puts all over the place this week. These were in June, also going up 100 times. So those were leading the dance out there this week. You guys can, of course, find this for yourselves if you go into that drop down on the TWIFO report and then scroll down one from ags into cryptocurrency. What is the vol out there? If you heard our crypto show, you know it's getting kind of anemic out there. It's about a 50, which is a lot for most asset classes. For crypto, not so much. Skew-wise, again, another thing we've been talking about here for a while, and that front March contract, which did 56% of the paper, the puts are 3.3% bid, the calls 3.4% bid. So that skew is very flat right now, kind of showing us that, at least for the foreseeable future, the options market has no particular bias one way or the other. You go a little bit farther out, that changes. You go out to, let's say, June, and now you're seeing a nearly 6% bid for the calls, and the puts are flat. So the bias longer term is to the calls, which is historically what you would expect in crypto. But in the near-dated March, where a lot of people are piling in right now, things are very much equidistant. Let's go to the micro. The micro has been the question mark as well. They launched these to really try to resonate with you folks out there, the retail futures options trader trying to get you intrigued by all things crypto at CME. Kind of been hit or miss, and that's the case again this week. A big miss, 145 contracts on the tape. Let's go back to last week, see if we see anything else lighting it up. A little bit better last week, 800. Again, these are still micros, so they have a long way to go out there, unfortunately. Let's go to the world of Ether since we're hanging out in crypto really quickly. Not a big week here, 93 contracts, ETH hanging out, 1657 right now. Last week we saw 515 of the big contracts going up last week. So last week, a big mover for CME. That might be the most active week we've ever seen out there. I'll have to go crunch numbers to make sure, but that's certainly a banger in big ETH terms, which again, small sample size, but intriguing nonetheless. And we'll get out of here on the Just the Facts week this week here. Let's go to micro Ether, see anything lighting it up out there. And actually, doing a little bit of paper last week. 2,600 contracts on the tape for micro Ether. Can they continue that momentum this week? The answer is no. Only 700 on the tape. But you know who always has momentum, listeners? It's you folks. Let's check in really quickly. A little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
Just checking out our live chat with our pro listeners, and they're loving the corn chat. Option God putting in a bunch of corn emojis. So folks excited to have some corn. Options Queen saying, I wanted to do a corn kid meme, but Mixlr won't let me put a meme into the chat. We'll have to bring your concerns up to the folks who created this system that we use for our live streaming and for our chat for the pros listeners. You can't put a corn kid meme. What's the point of it? Clearly it's broken, but glad to see you folks were enjoying the corn. Yeah, corn doesn't really make it on the docket very often. So when it kind of slips into our movers and shakers, got to kind of give it a little bit of love. Speaking of love, we have a question for you folks this week, listeners, and we really need your input on this one. It's the question of the day, some might argue out there in the trading world right now. It's impacting, your traditional equity options as well as the futures options on equity indexes over there at CME, because this is all the rage right now, this 0-day explosion. Everyone is trading for the moment. They're living for it today. Forget about the end of the week or the end of the month or, God forbid, the end of the year. Nope. You're in it right now. You're in it to win it. tomorrow doesn't even exist for you. It's all 0 day. So we're asking you this week, is this 0 day explosion in the S&P 500, is this increasing intraday volatility? If you've been paying attention to the market lately, you have noticed, shall we say, a few whipsaw-y type of days where we're down and all of a sudden towards the end of the day, bam, not only are we unstripped, we're up, or maybe we're up and then we're back down. And it does anecdotally feel a little more whipsaw-y, to coin a phrase out there, which is why we put this question out to you. What is the culprit for that? Is it these 0 day contracts? Very simple this week, listeners. Yes or no? No out, no third option. I don't know what 0 day is. Nothing like that. We wanted to go straight to the fire. It has been a very contentious issue. I myself, when we first posted this, I was thinking to myself, that it just seems like they have to be increasing intraday volatility. We jokingly refer to them as gamma bombs here on the show because that's what they are. These contracts are all gamma. There's nothing else to them. So they're interesting. Of course, we've been talking about it a little bit more this week. This poll has obviously spurred a lot of conversation, and talking with some people who have been looking at the actual flow, including the flow master on the option block last episode, Mr. Matt from ORATS earlier this week on our advisor's option program. Another great episode you folks should be checking out on the network, listeners. And when you actually look at a lot of the flow, even Dan from MTM was kind of leaning this way as well. If you look at a lot of the flow, a lot of it's very out of the money strikes, and it's stuff like iron condors and flies, or stuff that's just straight selling premium, still far away from the at the money, that shouldn't, all things being equal, shouldn't really dramatically increase the gamma. But I'm still going to go with our audience here. Listen, I definitely, in my heart of hearts, feel like there is an impact there. And again, we are starting to get more hard data on this, which is good to see. So hopefully we'll know more in the near future about exactly what the impact is. And again, if some folks are starting to sell more gamma to the market makers, at the end of the day, they have long gamma market makers. That's actually a bit of a good thing. So it's intriguing. A lot of back and forth on these. I know these products themselves are also very controversial. Some folks hate them. They think it's just gambling. Some folks love them. Some folks a little bit in between. But it's an intriguing thing. You certainly can't argue with the volume. It's certainly there. So we will see more of these, not less, in the future. But right now, at Options is the place to go, listeners, to make your voice heard on our question of the week. And right now, with about a day left, the folks out there agree with me. Nearly 61%, 60.8% saying yes, 39.2% saying no. I will point out that has decreased from when we first posted it. It was somewhere around 80% of you saying yes. So the nays have started to sneak in there. I'm curious, listeners, what do you have to say? Get over there at Options on Twitter and make your voice heard. All right, listeners, that music means we've come to the end of a Just the Facts, ma'am, edition. Energy, ags, a little crypto, your thoughts on zero DTE. Then we're out of here for this week. Remember, we're here for you folks at the end of the day. So you have a question, you have a comment, if you have a product you'd like us to discuss on the show, as long as it does more than, let's say, 9 contracts, like lumber, or in case of oats, 0, or maybe vice versa, 9 for oats, 0 for lumber. As long as it does a little more than that, we'll try to work it into the show. The show is your show at the end of the day, listeners. That is unfortunately going to conclude our broadcast week, or I should say our broadcast day here. But don't worry, back again tomorrow, noon Central, 1 p.m. Eastern, for all things volatility. Going to talk volatility views. I got a feeling we're going to get into this poll question in a little bit more detail. So if you want to join the fun there, tomorrow, noon Central, 1 p.m. Eastern for volatility views. And after that, for all you pro folks, Options Oddity is going to get into the weird, the wild, the whimsical paper that's lighting up our tapes out there this week. Then back again on Monday with the option block all the way through to next Thursday. Another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.